Welcome to this monthly market and economic update. May proved to be a remarkable month for markets, with the S&P 500 staging a 6.2% comeback, erasing its year-to-date losses. This turnaround happened amid a complex landscape of new trade agreements, mixed economic signals, and even a downgrade of the U.S. debt. Bonds declined slightly by 0.7% in May, although they remain positive on the year. The 10-year Treasury yield ended the month at 4.4%, reflecting ongoing volatility around federal spending and debt concerns. On the economic front, encouraging news emerged from inflation data. The Consumer Price Index showed prices rising just 2.3% in April compared to the previous year, the slowest 12-month increase that we've seen since February 2021. May's rebound serves as a powerful reminder that markets can be resilient and demonstrates how quickly sentiment can shift when conditions begin to stabilize. Over the next few minutes, we'll discuss some of the major narratives and concerns from the past month. First, in a significant but not unexpected move, Moody's downgraded the United States' credit rating from its previously top-tier status. This development marks another milestone in the ongoing concerns about America's fiscal health. The timing of the downgrade coincided with the House passage of a tax and spending bill that would extend provisions from the 2017 Tax Cuts and Jobs Act. The Penn-Wharton budget model projects this legislation could increase deficits by $2.8 trillion over the next 10 years. The bill now goes to the Senate, where it will be debated and possibly modified. As this chart illustrates, the national debt has only continued to grow, with the U.S. total debt reaching 122% of GDP, while net debt, which excludes what the government owes itself, has climbed to 97% of GDP. While these fiscal challenges clearly require long-term solutions, the U.S. dollar's position as the world's primary reserve currency continues to support demand for Treasury securities in the foreseeable future. Trade was another major topic in May, as negotiations showed meaningful progress. This means that many of the worst-case scenarios are possibly off the table. The administration reached agreements with both the United Kingdom and China, while continuing discussions with other major trading partners. Despite these positive developments, uncertainty remains a key theme in the trade landscape. Both China and the U.S. have recently accused each other of violating their trade agreements. Additionally, the administration is pursuing higher tariffs on steel and aluminum imports. The administration's trade policies also face legal challenges. In May, the U.S. Court of International Trade struck down many of the newly enacted tariffs, ruling that they exceed presidential authority. While a federal appeals court has paused this ruling, ongoing legal challenges add another layer of uncertainty. Finally, the first quarter earnings season provided encouraging news for markets, with corporate America demonstrating solid financial performance amid ongoing economic uncertainties. S&P 500 companies delivered positive earnings and revenue surprises despite the challenges of the past several months. Meanwhile, consumers have been pessimistic this year, driven largely by concerns over tariffs and inflation. However, recent indicators suggest that this trend may be shifting. The University of Michigan's latest survey for May revealed that inflation expectations decreased slightly, while overall sentiment appeared to stabilize. Overall, May was a positive month. Despite fiscal concerns, progress on trade negotiations helped provide a boost to markets. These developments highlight the ongoing importance of maintaining perspective and focusing on fundamental economic trends rather than getting caught up in short-term policy headlines. We hope you found this monthly market and economic update helpful. If you would like to discuss markets, tariffs, the national debt, or your portfolio in more detail, please don't hesitate to reach out. We look forward to speaking with you.